Dear investors, welcome back to a new video on our YouTube channel. This time we'll speak about Spanish company Inditex that most of you probably know through their famous brand Zara. Before I start analyzing the company, please be so kind and subscribe to this YouTube channel so that you will help us grow this channel, and also do not forget to like this video. Right, having said that, let's go into the share price. What is happening to Inditex? So the share price, as you can see here, this is the listing on the Madrid Stock Exchange, has reached in fact a 52-week bottom share price of around 43 euros per share. And you see that the share price had reached a maximum at around 56 euros. I think that was December 2024, which is now basically we're at minus 25% of the peak over the last 52 weeks. Before I'll try to shed some light on what is happening with Inditex in terms of company, I want to first walk you quickly through the brands, because I mean, you may know Zara, but it's not the only brand that the company is operating. So here you see most of the brands. There is a seventh one, which is Oysho, which is a leisure fitness type of brand, less known, but you probably know Zara. You may know the Zara Home retail stores as well, but then you have also some younger brands like Pull&Bear, Bershka and Stradivarius. Then you have a little bit more like, I'll call it middle-end type of brand like Massimo Dutti, which is more like, they call it timeless, modern, elegance. So those are the brands that actually are operated together with Oysho, that I could have added here as well, but those are the brands that are operated by the Inditex Spanish company. One thing that is interesting as well, I mean, I mentioned that probably most of you have seen or know the Zara brand. Zara is considered one of the top 100 brands in the world, depending on which marketing agency or brand agency you are looking at, if it is Interbrand or Kantar, but both are setting the Zara brands at rough cut around the 50th position in the world, and with a brand valuation of around between 20 and 40 billion, depending on how they make the calculation of what the intangible asset of the Zara brand is worth. So it's clear that Zara is a very well-known brand internationally with a global footprint. I will speak about the store footprint in a couple of minutes as well. So in terms of financials, so analyzing the last fiscal year financials, so they're gonna report now the first H1 financials around September 2025, so in a couple of weeks. But in the meantime, what you can see that compared to the fiscal year, the revenue by brand has been increasing on average by 7.5% year over year. So, and you see that when you look at the first table, you see that Zara, together with Zara Home, they rough cut represent 2/3, even 3/4 of the revenues of the Inditex group. And you see that Oysho is the smallest kid on the block with 831 million of revenues, in fact. In terms of brand growth, you see that Zara, Pull&Bear and Massimo Dutti are only having single digit, so mid-single digit type of growth, while Bershka, Stradivarius and Oysho are having double-digit growth rates year over year. What was interesting as well, which was something I learned as well when preparing this analysis, is that Spain represents 1 out of 6 euros in terms of revenue for Inditex, and Europe, excluding Spain, is 1 out of 2. So you see that they have a, I mean, this probably will show up in the geographical footprint figures, and I can confirm it will show up. They have a very strong presence in Spain and across Europe as well, but they do have a global presence in the Americas, Asia and the rest of the world too. So, and you see that what is interesting is that in the home market, so Spain and Europe, so the revenues have been growing slightly year over year, but or the contribution, but you see that Americas and Asia, that the contribution to the global revenues of Inditex have been actually decreasing, and we'll speak about China actually in this slide. So what is their geographical footprint in 2024? So rough cut, they have a little bit more than 5,500 stores across the world. You see that Spain is the biggest contributor, so they have, in end of the fiscal year 2024, they have a rough cut 1,000 stores. But what is interesting as well, they have been shutting down 6% of their stores in Spain. I was surprised, I didn't know this, that Italy, Portugal and Poland were their second, third and fourth markets in terms of geographical presence. And you see that also there they have been shutting down stores. So rough cut, all those markets have seen a decrease of the geographical footprint of Inditex. Then last but not least, look at the Chinese figures. So China, they have shut down 30% of the stores between the 2023 fiscal year and the 2024 fiscal year. So that's shutting down nearly 60 stores in China, which is pretty surprising. But they speak about it in their financial report. That's why you should analyze and you should read financial reports to understand what is the intention of the company. So they clearly mentioned that they are shrinking their footprint in China, but they're being much more focused on, let's say, fewer but bigger stores with better experiences for their customers in China, which explains why this number has been decreasing. And I will speak about geographical expansion at the very end of this video. In terms of right sizing, so in these figures you don't see the splits per brand, but here you see the split per brand. So what is interesting is that, I mean, if you look from the highest to the lowest, the only brand that has seen last year the amount of stores increasing has been Pull&Bear with plus 1.1%, while the leisure type of fitness brands Oysho, there in fact Inditex has decided to shut down rough cuts 10% of their stores, which is huge. But year over year, rough cut, the capacity has come down by 3%. So from rough cut 5,700 stores to a little bit more than 5,560 stores. What is interesting as well, and I was analyzing the figures from the COVID period, is that first of all, I mean, before the COVID, they had rough cut 6,800 stores across the world, and now they're at 5,500. So rough cut, they have reduced by nearly 1,300 stores their geographical footprint. What is interesting as well is something I didn't know. I mean, I knew it for Starbucks. Starbucks has 1 out of 2, Starbucks coffees, which are franchised. I didn't know that Inditex was operating licenses and that they had franchisees. And what is interesting as well is that most of the reduction actually came from company managed stores, not from franchised stores. And I mean, I'm not the biggest fan of franchise stores. There's always a risk if you, and I've seen this with Starbucks, that the experience that the company management wants to have will sometimes not be respected by the franchisee. So that's a risk, but it's always easy money. You don't have the capital intensity. You don't have to put cash, open up new stores. That's the advantage, that somebody else is taking that risk for you as in fact when you are running a franchise. So I was still not understanding what is going on. I see that the geographical footprint is decreasing, and I was like, but why is the share price dropping, and why has it reached a 52-week low? So I asked Vinj, in fact, what has been the growth of Inditex over the last 3 years. So I mean, for those who would not know, the ticker on the Madrid Stock Exchange of Inditex is ITX.MC. You could also prompt Vinj what has been the growth of Zara. I mean, we have trained Vinj that if somebody asks for Zara, it will understand that you're talking about Inditex, in fact. And so you see, in fact, that the, let's say, average year-over-year growth for the last 3 years has been 11%. But in fact, when you pay attention to the results that Vinj has provided, you see that the revenue growth and the net income growth are slowing down. So from 2021 to 2022, the company was growing at rough cut between 17 on revenue and 27% on profitability. And last year, so 2023 fiscal year figures, they were only growing revenue at 10%, and net income was still very good at plus 30%. And 2024 end of fiscal year, they had actually a revenue growth slowing down to plus 7.5%, if you remember one of my first visuals, and the net income was still growing but only at plus 9%. And this is where, in fact, I saw, okay, this is the explanation why the share price is dropping and has reached a low, because this is a typical thing where growth investors, they have been pushing the share price up, believing that the company would grow probably at a 20% year-over-year rate for the next decade. And of course, we all know, I mean, growth is not unlimited, and so at a certain time growth will come down. And this is what probably Inditex is facing now, is that growth is actually shrinking. And remember, on top of that, growth is shrinking because they are shutting down some geographical footprints as well. So obviously those assets are no longer there, so they will no longer contribute to profits and to revenue as well. Right, then the typical thing I do afterwards is also I ask Vinj to perform a fundamental analysis. Also, I call it sometimes a level 1 analysis. So I'm putting here just the numbers together. So first things that I always look into when I analyze companies, I look at the reliability of the financials. And you see with the Bene Jamsko, that's something that is pretty unique in Vinci, that the Bene Jamsko is very decent. I mean, Vinci is giving you the interpretation. You don't have it here, just put the figures here. But Vinci will tell you that at minus 2.90, I mean, the reliability of the financials is okay, that the financials are not manipulated. What was interesting is that the price to earnings relative valuation was already close to my 15 value, which starts to give me indication and signals that the price is showing some elements of fair valuation, if not undervaluation. The return to shareholders is decent with 2.61%. It's above inflation, but no share buyback yields, and the dividend payout ratio, I'll speak about it later on, but that's the policy of Inditex. They send back 60% of the profits to their shareholders. In terms of solvency, the solvency is fantastic. Debt to equity is very low. Interest coverage ratio is super high, and the risk of bankruptcy that is shown by the Altman Z-score. I mean, the company, if the financials have not been manipulated, which the Bene Jamsko suggests that they are not, I mean, the company will not go bankrupt tomorrow. Very interesting as well is the profitability and capital efficiency ratios. They're at easily above 20 to 30% on return on invested capital, which is pretty good, in fact, on return on assets as well. So pretty strong financials, I must say. Then, of course, the next thing is I want to know what is intrinsic value of the company. I have today the street that is giving me a share price at rough cut 43 euros per share, and I want to know what is a share worth, in fact. So I asked Vinci what is intrinsic value of the company without giving any other assumptions. So Vinci is doing this sensitivity analysis for me, has taken as a conservative growth 9.69% because it's looking at the free cash flow to the firm 3-year growth, and for the specific industry, Inditex is in an industry where the cost of capital is 8.22%. And of course, you can play with those numbers if you have a lower cost of capital or higher cost of capital. And if you want to have a more conservative growth, you can actually factor in a maybe 5%, even more defensive growth. So with those assumptions, Vinci is telling me that the intrinsic value of Inditex is between 54 and 70 euros a share, meaning that at 43, it would appear undervalued, actually, which could be, amongst others, a buying signal. So, and again, I mean, I'm doing this for educational purposes. This is not now a solicitation for you and go and buy Inditex, right? But I'm doing this for educational purposes. And again, remember that when you put your money into the stock market, it always carries a certain degree of risk. So pay attention to this and take your own decisions. We have created Vinci to help you in your investment process. And of course, there are assumptions there. So here, the intrinsic value is given on some assumptions, but if the growth is coming down to 3%, the intrinsic value, of course, will not be at 54.70, it may be at 40 euros, so the current share price would be overvalued. So pay attention to those things. Passive income, that's typically something that I do not cover, but I wanted to cover it here because there was one interesting thing I learned when analyzing Inditex, is that the company is actually growing their dividend year over year, and they are now at 0.68 euros twice per year, so that's a rough cut 136 euro per share. On 43, that explains this 2.61% passive income of cash dividends. And also dividend policy, remember that the company is clearly similar to Mercedes. The company Inditex is saying that 60% of the profits will be sent back to shareholders. I think for Mercedes is 40%, if I remember well. But of course, if the profits are coming down, the dividends payout will, the percentage will stay, but the cash dividend amount will go down. So pay attention, because there is also a certain amount of risk involved if you don't factor this in when you analyze the company. Briefly speaking about the strategy, I will not go into the details of it. You see Marta Ortega Perez, the chairwoman. She's the daughter of founder Amancio Ortega Gaona, and then you have the CEO, Oscar Garcia Maceras, on the left-hand side. So what is their strategy? What are they commenting in the analyst calls and in the financial reports? So rough cut, they have a 3-point strategy. I'll start with the easy one, sustainability. A little bit is on everybody, on every board agenda, is so they claim that they want to be 100% lower impact fibers by 2030. Okay. Agility and growth, you're going to see, in fact, that they have similar characteristics like Amazon in terms of, let's say, warehouse management, supply, and value chain. So they really try to source fast and short, so proximity routes as well, and also taking into account that more and more people buy online. So that's why also they have been reducing their footprint from, 6,800 stores to 5,563 stores now, end of last fiscal year. And then they want to have specific, they want to continue creating nice products. And I'm showing you a small lineup. I may do with my daughter a specific product overview on Bershka, which is it's a brand that really is very much appealing for younger people. And but you see that across all their brands, they are having specific series, so to keep and to refresh their product lineup. I'm just gonna call out one, which is the MiFi sneakers that you see here. I mean, my daughter has been buying them, and I must say they really look good. The quality looks good, and they have a lot of those special editions with global music artists. I think my daughter mentioned Billie Eilish as well. So they are having a clear product strategy, always to refresh their product lineup. I will speak probably about this in a specific separate video. Right, then last but not least, footprint expansion. So they continue to grow, but to be much more selective in how they allocate their capital. So I'm not going to I will not run you through all the expansion points and geographies that they have. You see it here, but they're expanding still. Zara Men, dedicated stores, not mixed with women. Bershka in Mumbai, Oxford Street in London for Pull&Bear, for example. And then they're opening new markets like Iraq, for example, and some brands will open their first stores in countries like Sweden, Austria, Netherlands, and Germany. That's everything I wanted to tell you. I hope that you continue to like this type of videos and quick analysis, so that you have a first overview of the company. And again, do not forget to subscribe to our YouTube channel, like this video. So by doing that, you're gonna also support the growth of our channel. Thank you very much. Talk to you in the next one.